Hello and welcome to the Pint Talks podcast, where two old friends chat about the world over a pint. In this episode, we talk about the recent and still developing Wall Street bets versus hedge funds battle. We discuss the role of social media and changing trends in investing. Nothing we say here should be taken as financial advice, coercion, or endorsement of any of the actions or services discussed. This content is purely for educational and entertainment purposes.
But it is interesting also, though, on the positive side, on the semi-positive side, that we like what's happening now with this GameStop. Somehow, people that are strangers, that don't know each other, are able to organize and form this fist to at least punch someone once.
To fight back.
That's kind of fascinating.
Yeah. In a way, I think a lot of people felt it like this. At least the small guy got one in.
For sure, it feels like that, and that's why it's sort of this big movement, and people are so excited about it. Is because it feels like there's a way to resist the system. There's a way to resist all the shady activity that's been happening with hedge funds and with Wall Street. And I think that's what's fueling this movement.
Yeah, it's a way to hit back at the people who've, in some ways, orchestrated our lives for decades. Let's rewind a bit. What happened and what are we talking about?
Well, we're talking about the thing that everyone's talking about, and that's the Wall Street bets. That is what's happening on Wall Street right now. I'm sure you guys have already heard about this a lot, so I'm not going to go too deep into this. It's all over the news. But basically, stocks such as GameStop, and I think it was 12 other stocks in total, are getting inflated, seemingly kind of artificially. Out of nowhere, they just went up. And the reason was because an army of people, through social media, through various places like Reddit, have decided to really invest into those stocks in order to what is called squeeze the short positions. They appear to target stocks that have very big short positions. And a short position is basically someone betting against a stock, someone betting that the stock would go down. They picked stocks that have these huge short positions, particularly by these big hedge fund managers. And so this army of individual investors just totally inflated the stock in order to squeeze the short position to really hurt the hedge funds and by raising the stock.
I think we can go a little bit into what a short position is, a long position is, and a short squeeze is, because even for people who invest in stocks, I think they're not necessarily well defined in how they work. So in terms of just educational, it could be nice to just talk about a little bit longer. I think you're better fit to do it because you actually do investing.
I can do it. Normally, when you're investing, the most basic form is you buy a share of a company, you buy stock, company stock. And what that is, it's a piece of the company. You buy a tiny piece of the business. So you're technically a business owner when you do that. So that's the traditional way. And in many ways, that's considered long investing. I don't know why it's called long, but it is the long position where you're betting that the company will go up. The stock price of the company will go up. That's why you're buying it. And if it goes up and you own your share or number of shares that you own, then they'll be worth more, so you can make a profit out of that. So that's the classic investing that many people imagine what investing is, right? It's the same in when you buy gold or anything that you buy. Maybe you buy a painting. You're buying it and you hope that maybe it will go up in price. That's kind of like an appreciating asset.
Okay, but what happened then with Wall Street versus Reddit was that was not long positions, right? That was shorting. So can you explain what shorting is?
Yes. Now, there are ways you can also invest in the market. If you think a company's stock is going to go down, you can also short it. So you can short the stock of the company. Shorting is a way to basically bet against the company. And the way shorting works is you borrow a stock from someone and you pay a premium for that, some sort of a price for that, right, to borrow it. Then you have to return that stock to the same person within a set period of time. So what you do next is you sell the stock immediately on the market at the current price, and you take that money. Then what you do is you wait. So you still have that money that you sold that borrowed stock for, and you wait, hoping that the stock price will basically go down. Now, If it does go down, you buy it at that lower price with the money that you had from selling it earlier, and you return the stock to the lender. What you do is you basically keep the difference between the price you originally sold the borrowed stock at and the price you bought it at. So you take that difference, you pocket it. So that's a way to bet against the stock or to short it. And what happened with stocks like GameStop and others, like AMC and BlackBerry and others, is that they had very large short positions. There were a lot of people, and particularly hedge funds, that had shorted the stock, in effect, betting against the company. But
Yeah.
yes,
So the way that works is it also decreases because you, in a way, move a stock horizontally as opposed to a bias stock. It actually also decreases the demand for these stocks as well. So the price would naturally go down. Is that right?
Yeah, the way stocks work in general is, they go up when you buy them and they go down when you sell them. That activity of you doing the short position or buying that option to do a short will potentially decrease the stock's value. And obviously these experts and traders and hedge fund managers, they understand that stuff very, very well. So some of the points made in the media lately are that, they could be using these type of strategies to really, they have been, to really like hurt the company, to sort of have a big impact on them. And what's happening now is essentially to counter that. So people are buying the stock, they're buying options that are up. So they're doing it's called a call option when you're trying to predict that the stock's going to go up. So they're really doing the counter movement in order to basically screw up all these hedge fund managers that are shorting the stock.
It kind of makes sense also in a financial sense, because if you short a stock, you make the stock go down, then somebody buys it off cheaply or cheaper, and then the stock goes up because demand goes up. So in a way, financially, I think some of those Redditors who bought all those stocks did pretty well. I mean, the stock is up more than, just to give people an idea, the stock is up more than 1,000%. GameStop in March 2020 was about $3. At the moment, it's over $300, and it's going around.
Granted, you picked a very specific point in time where the whole market is really low.
Yeah,
but
yeah.
Yes, but they did. Yeah, it is astronomically up right now. Well, it is interesting what's going to happen later. Like how at the time of this recording, we're in the middle of this situation. And so we don't know who's the winner, who's the loser of this. Mm-hmm. We know that currently certain hedge fund managers have lost a lot of money. They've exited their short position on a big loss. But the stock will not just go up endlessly. The buying will stop at some point. And so there will be definitely a lot of these people who are buying will be losers as well in the long run. Some of them will make a ton of money probably, and then some of them would lose. So obviously, depending on how late you exit your position.
Yeah, that's the whole thing now, is when people exit. And on the flip side, if somebody shorts this position at the right time, they're also going to make a killing. Even before March 2020, and it's true that that's the lowest that stock has been in a long time or ever. Even before then, GameStop was worth maybe $10, maybe $15 per share. So to go from 300 to 20, that's a lot of money.
It is. And you would have this situation where people are just going to be afraid, I think, to short it just because of what happened. They're probably going to be afraid of shorting anything now for a bit, but they might be particularly afraid of shorting GameStop. So their stock might naturally be higher for a while, just because there's going to be a lack of shorting, just because it's such a scary place to be as a short position.
The last concept that we might want to talk about, which you mentioned, is short squeeze.
Sure. You wanna go at it?
Sure, yeah. To my understanding, a short squeeze, you have bought a short position, you see that is going badly, and you start buying up stock. And by buying up stock, obviously the price will keep on going up. However, you can then sell that stock at a higher price and mitigate some of your losses.
Yeah, essentially they have to cover their position, because since, for example, now if you're short in GameStop, the stock is going up so high that your losses could be monumental. So the only way for you to really protect yourself, that I'm aware, is if you start buying it. So you kind of jump on the wave. So you're kind of like playing both directions, and you're kind of screwing yourself up by doing that too, because you're raising the price. So it's a poison pill for sure. So one aspect that's kind of fascinating about this is that this whole thing seems to be orchestrated in social media. particularly places like Reddit, where people have this Reddit code Wall Street Bets, and then that's very popular for all kinds of bets. My understanding is I haven't been reading it before this thing happened, but it seems like a bunch of these people got organized and they acted as a unit. That's kind of a fascinating development, isn't it?
That's absolutely, yeah. And I think it really goes into our discussion about social media and the strengths and weaknesses of social media. And this, I think, is one of the strengths where people can really mobilize for a certain cause that they enjoy. And one of the things that stands out for the whole thing, to me at least, is which stocks were chosen. GameStop is one, and the other is AMC. And if you have grown up in your teens in the US, you're in your 30s, maybe 40s now, GameStop is probably a big part of your childhood because it used to be a huge chain of stores, and they still have a lot of stores, but you go and you buy consoles, you go and you buy games there. It's a shop for video games, for memorabilia, for merchandise, for games, pop culture in general. So a lot of people who've grown up now and in their 30s, they would have worked there and they would have visited there for sure. And it used to be almost a social center at some point. I'm wondering how much of this, and buying this stock in particular, has to do to screw up some people and some hedge funds, but to also save a company which some people consider to be very nostalgic.
Yeah, that's an interesting aspect.
And the same with AMC, because AMC is a company dying at the moment because of COVID. And it again is a staple of American culture in a way, because I have my local AMC. I'm betting a lot of these people have their local AMC as well, and it's one thing that you don't want to go away, but because of market forces, it may very well. And it's similar, like you probably have gone there for dates, you probably have worked there as well.
For sure, yeah, that might have a piece of it, for sure. There's a few reasons for it, right? One of them is, from what I've read all over, being bombarded with this in the media, they picked stocks that were particularly heavily shorted. I think GameStop was somehow, and I don't understand how that possibly works, but it was 130% or so short position. So somehow it's more than 100%. That kind of thing just pisses you off, first of all, that this type of thing exists. For those of us that don't quite understand it, for the commoner or the normal person, it just sounds crazy. It sounds like they're playing this very dangerous game with this excessive shorting that looks deliberate. It looks, and then in some cases it looks overdone.
Well,
I think part of the beginning of this movement was someone made an analysis saying that GameStop's not nearly that bad as the short position suggests. So it's kind of like an injustice is happening on it.
Can you clarify a little bit what shorting it that much would mean in the real world? Like, how would that translate in for the company? Basically, having your stock that short would be bad for the company, wouldn't it? Like, you wouldn't see as much investment in your company.
Yeah, so it could affect, definitely, it creates like this very negative sentiment around the company. When you see that all these hotshots are shorting it, then a lot of people might be discouraged, might be afraid of investing in it. So now what does that do to the company? Well, if they have a very low, now it doesn't change the fundamentals of the company. It does not affect really what they do in their operations, but it could restrict their ability to raise capital, for example. Many companies use their stock to raise capital. When you have such a position discouraging investors, it could shake up the leadership in the company. So it kind of brings, sort of destabilizes the whole firm when the stock's doing so badly, because shareholders get pissed off, the board might get pissed off. It's generally a bad thing, really bad thing for the company. And it's snapping out of this is probably going to be very difficult, especially for such heavily shorted positions. So some of these are, companies that are in tough situation now. GameStop is one of them, heavily affected by coronavirus, AMC. Also, just trends in society. GameStop has been suffering, I believe, from what I also read about this. Just having the older business model, having, not the trending thing right now.
Well, even then, I think it makes a lot of sense for GameStop that it was maybe a little bit overvalued, because on top of the whole thing, brick and mortar stores and the older business model, which seems to be on its way out, you also have we just passed Christmas, so usually these kinds of shops operate very well around Christmas. They make a lot of profit in the last quarter of the year. The second big thing, which was probably very big, was we just came out, the new console generations like PlayStation and Xbox just came out. They came out in the last quarter of last year. And they've pretty much, you're probably riding on the tail of that hype in revenue, but it's probably towards the end of it, because the early adopters, the people who would buy a new system when it comes out, would have bought it already. So you have two big things that are ending, and GameStop had grown from March, which was about $3, to about $20 in December. That is before any of this happened. So you already had a big change there. So I suppose people were expecting that now after Christmas and after the new consoles, it'll drop back down.
For sure, yeah. Yeah, I heard some of that. I haven't tracked the sort of the fundamentals of the business, so I can't comment in too much detail about it, but I definitely read some articles about that too, that they were expecting just a natural drop in the company because of the seasonality and the timing of these consoles, for sure.
Just to give people an example, so maybe you're not too familiar with how console generation works. Typically, what you have is game consoles such as a PlayStation and Xbox. They get released every 4 to 5 years. There is a release of a new generation, or maybe not 4 or 5, but 3 to 5 years. I actually don't know exactly what a cycle is, but that's basically it. You get a new generation out. So you had the PlayStation 1, 2, 3, 4, and now 5. So you have all those places, and each and every point, the revenue of things like GameStop and other Walmart and other things go way up, because a lot of people want to buy that console right away. So you get a huge revenue boost from the people who are buying that console. And especially for, interesting enough, for both Xbox and the PlayStation 5, they ran out. A lot of shops ran out of inventory, and there were waiting lists for these consoles. So there was a huge demand for them, which the manufacturing couldn't meet. And now that's over. So naturally, you would expect that the revenue of such companies would fall down. Now, what we see for Walmart, that's a small part of their revenue stream. But for places like GameStop, with the nature of the way the games are sold now, that would be online, a lot of it. So places like GameStop, which used to focus on on selling games, they're a little bit like Blockbuster or the video store, the DVD store. They're not hanging on very well. So that, I think that's another reason that GameStop was probably going to decline, but it was probably not going to decline back to $3.
Yeah, probably not. I mean, I think obviously the coronavirus had a big deal, I think, in the stock being probably $3. I don't know details of it, but from the timeline that you described, I think a lot of companies were really down in March. It's interesting that a single company can become a battleground of philosophies or of generations or of classes, just fighting over this really one stock. I mean, there's a few of them, up to I think 13 or so. They might grow in the future. We don't know what's going to happen, but it's to me it's crazy how, and the market's been going down the last few days because of this, largely described by all kinds of analysts, that being the main reason for it. So this one small stock had the ability to actually shake up the whole markets. Wow, that's remarkable.
In a way, it shows you the power of social media. I personally, at the moment, find it more positive than negative, because you're right. In a way, it was a hit by the small people against the big hedge funds, which were not doing something that many would consider positive. I think, yeah, a lot of the market problem is with trust. Now that you have this extra player in the market, which people may not have considered before, a lot of it might be, well, how do we figure that into our predictions? And one big effect that this could have, for example, is, like you said, a lot of people may not be willing to go short anymore, or for at least for a while, because they could sit at the back of their minds, they could be, well, if I go short and I'm wrong, then I'm done. And short positions are famous even in those kinds of circles for being very difficult to predict, like for being very risky, from what I
For
understand.
sure, yeah. One thing that's even more interesting to me is that this is sort of the tip of the iceberg of this movement. There's been a movement that started in the last years. There's an app called Robinhood. So a lot of what is commonly called retail investors use that app. What's meant by retail investors is generally just like a normal person that does not have like a fancy team and just a regular investor, commoner. So Robinhood has been, you can kind of judge by the name, obviously. Robinhood takes from the rich and gives to the poor. So they kind of pioneered this model of commission-free trading. So for each trade, you kind of like don't pay a fee for the trade itself. That's been very interesting development in this. First of all, that army of Robinhooders is what people are referring to. I've been trading stocks for it's my 4th year now, and I've been hearing over and over how all these fancy analysts and hedge fund managers come on air in TV and all these shows and just completely bash these Robinhood investors. That has been it's like the term millennial, where millennials have been criticized left and right for things they're guilty of doing, not guilty of doing, and not even knowing about. And so same thing's been happening for
they
Robinhood
ruined
investors.
breakfast, the millennials. They ruined breakfast. They ruined the cinema, the millennials. Yeah.
It's kind of like that funny
They
meme
ruined,
that was happening. Thanks
everything.
Obama. There was a thanks Obama thing for everything bad happening. And
oh yeah,
so,
that was the meme online for a while. Yeah, anything happens, thanks Obama.
Right. And so the same thing's been happening with Robinhood. Like I've been listening to these people for years, just blaming every single bad movement in the market onto the Robinhood investors. And so now it's getting to a point where Robinhood investors are not just a bunch of these people that are not following what, I don't know, whatever the experts kind of expected them to follow, but they're kind of coming together more united, and they're being organized. I don't know by whom. It's actually impossible to tell because of anonymity of Reddit. But one way or another, they're getting together, and they are now a force to be recognized, force to be dealt with.
I was also thinking about this. It's an interesting dynamic about society in general. It's a way through social media and social media organizations of people to take charge of society through investing. It's a different lever that we can all pull, that people can pull to control what happens in which companies survive or what the values of society are.
Well, and it hasn't been accessible to us traditionally.
Yeah, that's a big part of it. So I would say this is like apps like Robinhood and social media in general. That's a big positive. And it's the democratization of both financial decisions on a high level and of information.
For sure. And why need that? And I think the answer is because, for example, if I want to invest my savings with one of those fancy hedge funds, which are some of them are managing more than 100 billion even, but they're managing all these millions and billions of dollars. Usually, I think the term hedge fund is for only billions plus. Otherwise, it's usually called mutual fund, actively managed mutual fund. And so if I want to invest with one of those, I can't. Usually, if I don't have 25 million or more in capital, I can't invest in them. So they're not accessible to the average Joe. I think a lot of these, if you don't have something like a way for you to invest in stocks, then otherwise you're stuck with, I don't know, you wait for your deposits to grow or something with very low interest rates. So it's kind of like a inequality manifestation, right? It's a manifestation of inequality where normal people don't have access to these funds, then the funds control the entire market. But what we're seeing now is like the rise of sort of people that are just investing through technology, through these simple to use apps, through commission-free trading. I mean, there's many factors that are leading to this. Obviously, I think democratization of information also is another huge factor, because we just simply did not have access to the same information in the 90s. But now at our fingertips, we have so much information about these companies and what's happening. So the field is getting much more even.
Even not only information, because when we were talking about information, I was mostly thinking about what a certain company is doing and news. But on even a different level, nowadays you can pretty much listen to podcasts about investing. This morning I woke up and I have an app about investing, and I just follow news there, and a lot of these things were discussed. So you can get a lot more help, a lot more education through the internet than you could ever get in person.
For sure, yeah.
If we take a few minute break, let's talk about what we're drinking at the moment, just to get a little bit of a relaxed flow, and then we can continue.
For you and for us, okay? Go ahead. What are you drinking?
I'm drinking another. Well, this is one I had for a while, but I can't have a new beer every time, so sometimes I have to repeat. And it's called Bennington.
No, you have to. You have to have a new beer every time.
Oh, I'm sorry. Do you have a beer?
I do not, but I have something else. Go ahead.
It's from Night Shift Brewing. It's called Bennington. It's an oatmeal stout with maple syrup and Dutch processed cocoa. So if you've listened to one of our, I've talked about that in another of our podcasts. Yeah, it's a pretty nice one. It's okay. It's
what I'm having or just had was a glass of Chardonnay. I have this black box wine. It's a box. I don't know. Is it like something like 4 bottles or something in the box worth of
Yeah.
wine?
It's from
It's pretty
California,
good.
right? It's a Californian wine, the black
I
box.
think so. Not a wine snob here, so it's good.
I mean, if you were, you
Pretty
wouldn't
well
be having
priced.
a box.
Yeah, that's true. So I'm not even, I don't even read my box. So I'm but it tastes pretty good.
Yeah. I think I know the one. I think I like there was this one Californian one which has like they're relatively new on the market and they have like 5 or 6 different box types and wine types. If it's the
They have
correct
quite
one,
a
I
bit.
was thinking
They
of
have
that.
quite a bit for sure. I mean, there's all kinds of
Yeah.
you can get a Merlot or Cabernet Sauvignon, all kinds of stuff.
Maybe I'm thinking of the wrong company. The one
The
I'm
boxes
thinking
are on the rise. Boxes are on the rise for
Oh
sure.
yeah.
We're seeing a
I mean,
ton of
they're
boxes
better
out there.
they're not better quality, sorry. They're better price than bottles.
Yeah, it's a
Because you can
better
buy
price point, and
yeah.
to be honest, it's also much more convenient. If I'm gonna just have it at home, the box has this little, God, I don't know the word, but like a faucet thingy.
This little tap.
Yeah, a little tap, right? Little tap, and I don't know. It's much more convenient than opening and managing bottles. And I do
Yeah.
like my bottles sometimes, but this is really practical and it's good taste, good price point. I like it a lot.
No, we also have buy boxed wines from time to time. Especially there's one company, Californian, it might be the same as yours, which is I like their reds a lot. And they have Cabernet Sauvignon, they have Merlot, they have a mix as well. They have Pinot Noir. They're quite good. Especially they're like $20 for 3 liters, which is pretty cheap for the US.
It's pretty good. I mean, first of all, wine in the US is insane. It is so expensive
Beer as well.
compared to Europe. It's like,
Yeah. Beer as well. Like I will actually say wine is on average, maybe it's more expensive, but there's some beers which are $20-$30 for the half a liter, which I find crazy.
well, that's real fancy. But
I mean,
that's crazy.
they're European imports, I suppose. That's why they price them that way.
But I mean, the wine is so expensive. Like a good bottle of wine, that's relative to who you are. But I mean, in Europe, it's so much cheaper in general to get a decent bottle of wine.
Yeah, absolutely. It's here, if you want something reasonably good, you'd need to be $15-$20.
Yeah, $15-$20. I came in expecting it to be like $5, and the $5 wines are usually like, oh my god,
Yeah.
not great.
There is no $5 wines.
There are some. It's like hardly a wine.
Yeah. Water with
It's like
color and vinegar.
Vinegar. I don't know. I don't know what's in it.
Vinegar
Not to bash
water.
on it, but y'all know what I mean.
I just thought I'd put that out there. I'm opening a new one. It's from a new brewery that I haven't tried before. It's from a brewery called Vitamin C. It's an IPA called Secret Vacation. It has a very interesting can.
That's a great theme for now. I
Yeah.
wouldn't mind a secret vacation.
It's like
by
an
the sea.
island. Yeah. It's like an island. And C, by the way, is spelled like SEA, not C as in the letter.
Vitamin C. Okay. Why
It's like-
why the vitamin? I don't know.
I don't know either.
It's
Because you need the C. It's like a vitamin. You need it.
I like
Get
it.
it.
Anything with C in it, I like
Yeah.
it.
Only C people would understand. You know, in my opinion, there's 2 types of people. There's mountain people and there's sea people. And one of those is wrong, and that's the mountain people.
Oh, yeah. I'm a C person.
It's to do with where we grew up, I suppose. And the can is really interesting. It's very colorful, and it's this island location with loads of greens and palm trees, etc. in the background. It's a really
Social
cool
distancing.
can. Yeah, social distancing, it's going to be great. In the world, you kind of, with the way that things are nowadays, you can kind of wish that you had your own private island.
Yeah, I mean, I wish that before COVID happened too. But
That's also one of the reasons I thought that this is a good topic to discuss is to really see how and explore how social media played a part in it, and to explore the good and the bad in relation to our other podcast as well. I think it's a really good example of how social media affects our world in general.
It is. It's one of those indirect effects of social media. When you think of the way these social media companies market themselves, stocks are never mentioned, right? You never hear Mark Zuckerberg or any of the sort of the big leaders of these companies kind of speak about this. but they do have effects. They have a prominent effect in all aspects of society and all over the place. And sometimes those effects are well understood in advance, and other times I think they're not at all. I don't think anyone could have predicted this would happen, especially with something so inaccessible as the stock markets. I mean, the stock markets have been. One thing is when someone gets trolled on social media or comments or something, but this is people putting their money in order to wipe out a hedge fund. Like they're literally betting their own money on that. And because, there's different motivations for it. Obviously, different people want to make money, and whatever the reason is, it's definitely a new way of using social media and in that sense.
Maybe I'm overthinking it, but in a very powerful way. I see
Probably.
this.
Go ahead.
I see this as people claiming power over their own destiny in a way, because in a big part, the stock market, like it or not, agree with it or not, determines how the world works and determines who succeeds and who doesn't. Like it's a very roundabout way, but it is a powerful way, right? Money talks, as we say. If the regular person has access to that and they have power in it, even if the individual doesn't, a collection does, then that can be quite powerful. And if a company moves in a way that society disagrees, now society has a mechanism of correcting that beyond voting for somebody every 4 years.
It can definitely feel empowering or liberating to show that the average Joe has a way of resisting the system or resisting the rich people or the hotshots.
One question I would have for you: do you think investing is good for the average person? Like, what has your experience been in this sense?
Yeah, so being a very good representative of the average Joe investor, I have no background in finance or economics or anything related. My background's in computer science, so I would say it definitely feels a bit liberating to me. A little bit feeling that I kind of have a control over my own destiny a bit. Whether that's true or not, obviously, it's a very complicated subject, but it feels like that. It feels empowering that I can use my wits and come up with certain hypotheses, test it out, and make money off it if I'm right. As opposed to the notion that I just make my money through salary and there's an X amount and there's, if you get lucky, you get promoted every few years or so. And it feels very interesting to have this other tool to control your destiny or nudge yourself in a certain way. If you want to save up, if you want to pay up a loan, if you want to, buy a house, that's one way for you to generate assets. And I think it's great. It's great that we have this now at our fingertips, because before it was actually, I don't want to say impossible for average Joes, but if you're paying for every transaction that you're making, then how are you supposed to learn? If you don't have access to the information about the companies, then how are you supposed to make the right bets? Now we're in this different era where it's possible, and I think it's great. Now, having said that, there is this aspect of it that I think the adults or the elite or the people that have been around and doing this for a long time are sort of warning against, which is people can lose a lot of money because they don't know what they're doing. I generally disagree with that. I think people should be free to use their money as they wish. There's obviously extremes to this. There's fraudulent activity. People make mistakes, but no one can come and tell me that the big shots don't make mistakes, that there is any investor in the world that has done it for a substantial amount of time, years, that has not made a mistake. Everyone's made a mistake. We learn through making mistakes with anything. And maybe sometimes we lose money by making mistakes. People lose all kinds of things when they make mistakes. But it's our right to have the choice to do this. And in that sense, I think it's great.
I agree with you. And there's, I suppose, 2 points that we need to add. First off, I will stress again, as you have heard in the introduction, nothing here constitutes financial advice. You do what you want. It's your money. You make the decision, right? Second off, I agree with you a lot that at the end of the day, nobody should come in and tell you how you should risk and what you should risk. And obviously, you need to be comfortable with your own life and with your own investments. Removing certain avenues of revenue for you, it can have just as bad of an effect as losing an amount of money, because overall, we need to all have control over our own lives and not have somebody dictate from on high what we can and can't do, so long as we're not hurting others.
You bet. it's definitely something that is new, and we'll learn from it. We'll keep tweaking it, but overall, I think it's a great thing that's happening. One thing about these apps, I talked about Robinhood earlier, about one example of such app that's kind of helped democratize this trading or financial investing. They kind of became an interesting player in this whole drama now that's happening with GameStop. What they did is they halted the buying for the stock. I think it was on the 28th of January, if I'm not mistaken. But they did it for a day. At the time of this recording, it was just for a single day. What they did is they allowed selling, but they stopped the buying. And in full disclosure, they're not the only ones that did that. I think a lot of the other trading platforms did the same. But a lot of people criticize that move because since Robinhood is sort of this take from the rich, give to the poor kind of a branding, and that's their whole what they're about. They got a lot of criticism because when you do that, essentially you only allow selling and you don't allow buying, then clearly the price will just go down. I mean, there's nowhere it can go. It cannot possibly go up. It's just people will be selling. And so what many people interpreted that as was taking the side of the rich people, of the hedge funds, of the elite. So they've kind of found themselves in the middle of fire here, whether they wanted it or not. I mean, I'm sure they didn't want it, but it's upon them.
There's a few lawsuits. I believe 2 lawsuits against Robinhood. It may only be one. I think there's 2. In one of them, there is a sort of timeline for this. And what they say is on 11th of January, 2021, the GameStop corporation stock started to rise. At the beginning, Robinhood allowed the retail in the stock. On and about January 27th, 2021, in order to slow, this is what the lawsuit alleges. I'm literally reading the lawsuit verbatim at the moment. On or around January 27th, 2021, Robinhood, in order to slow the growth of GME and deprive their customers of the ability to use their services, arbitrarily, purposefully, willfully, and knowingly pulled GME from the app. That is the end of the quote. So that's what that lawsuit alleges. So the timeline is about it's 11th to 27th, and I think they allowed it yesterday, the 30th, if I'm not mistaken.
There's a lot of lawsuits that are expected to come in for sure.
Yeah, and
I've
the
heard a lot
lawsuits,
of expectations for dozens of lawsuits possibly.
yeah, the lawsuits in the specific allegations in that lawsuit, and again, these are allegations made in the lawsuit. I'm just saying what they are. Is that the lawsuit is alleging that Robinhood is trying to manipulate the stock. And the second thing is that they have removed access of their users from buying the stock, therefore breach of contract between them and their users. That's what the lawsuits have alleged.
It's interesting how they have become this target now for lawsuits. The companies claim that they didn't stop it for, at least at the time of this recording. The official reasons they've given were pretty vague, but they were all sort of related to liquidity, where they have a financial requirement to, I don't understand it very well, but financial requirement to kind of hold certain assets so they can cover bets, and so to settle trades. And so what that means is basically they did it for financial reasons. They didn't have enough money to keep the system going, and to be they were legally liable if they wouldn't provide that money. So that's their explanation. Now, whether that's true or not, we probably wouldn't know for a while, if ever. But that's definitely not. A lot of people are not buying it. Some people are buying it. They found themselves in the middle of this for sure.
They're in a way the scapegoat of the whole thing. They're at the very center of it, and it might cost them. I don't know. Even beyond the lawsuits, I don't know how people in general would see it. Because as we said,
so far there's been a lot of negativity for sure. I think Google's been deleting a bunch of negative comments that have been left on the app.
Yeah,
like in a day, all these thousands and thousands of comments.
I actually have this. Like I was watching a video on exactly this topic, and as the video went, the guy was talking about it, and then he refreshed, and the number of comments on the Google Play Store went from 300,000 to 200,000 about. So they removed, just in that one instance, they removed about 100,000 comments, and you saw how the app just was hugely one-starred. When I looked at it at a later stage after watching that video, it was all back to what seemed like normal. and that they had removed a lot of these comments.
Right.
But there were, on the flip side, there were a lot of people who now in comments to that video and other videos said, well, I use the app and my comment was deleted and I am a user of that app and I was genuinely unhappy. So how dare Google do that? And I think a lot of this mitigation of damage is going to come back and bite a lot of companies in the ass.
Yeah, I find it quite strange, to be honest, that they would delete these comments, because that wasn't just trolling. It wasn't fake comments. It was users being prevented from buying a certain stock and reacting to it. I mean, if you're not letting me continue my position, I think I have the right to be pissed off about it. If I am a real user, if I'm genuinely upset about it, like, why can't I write a comment about it?
I'm not surprised, because a lot of the companies do that now. If you go in and you look at a number of even movies, music, and you look at the reviews, they remove a lot of the negativity and a lot of negative comments, and they even have certain they exclude a lot of the low comments through algorithms, because they say, oh, they're too harsh, or to prevent, what was the technical term of this, review bombing, to prevent review bombing. In fact, I dare anybody to go to Rotten Tomatoes and look at the rise of Skywalker, and I can guarantee you that the audience score will be 86%. It doesn't matter when you look at it, because the audience score on that movie has been 86% almost since it was out. It never moved. There are a ton of videos on this on YouTube, so just go and look it up.
Well, and people are particularly upset at Robinhood because of that whole take from the rich and give to the poor. And now people are saying, like, well, is it the sheriff disguised as Robin Hood, or what's happening there?
False flag operation, everyone.
Yeah, I mean, so Robin Hood was, I think, hugely rumored to be going public soon as a company. So it was expected. This is not. I don't have any information on this. Just saying what I've heard from here and there, but don't take this as any advice or anything. But there was speculation that they'll be going public within the next year or so. So after this scandal happened with them, now I'm not sure they're gonna go public pretty soon, because there might be a lot of angry traders at them. I'm not sure they want to face that.
Yeah, this opens up another question, which is, if you have this power to organize and you're unhappy with a company such as Robinhood, would you just go and short them and thereby hurt their bottom line?
It is tricky, because you will have to bet your own money to do it. Kind of like putting your money where your mouth is, like, pretty heavily. You can, but it's a lot of money to waste for that. Not waste, but to invest in that.
True, but I want to talk about something about Discord in a minute. But as the Reddit mods said, so the moderators to the Reddit subreddit, Wall Street Bet said, they have about 250,000 users. So if 250,000 users go and even make a small short on a Robinhood or a company such as that would still affect them quite a bit, because just sheer volume, even if you don't put in that much money.
Yeah, I think you're right. It depends on how big a movement they could get, if there was going to be such a movement. I'm not suggesting there should be such a movement, but just thinking about it, yeah, the more people they have, naturally, the more powerful they can be.
Because, I mean, they've been quite successful at holding GameStop at $300. And the way that this went is, the GameStop stock went from about $20-ish to about $350. Then it went down to $190 the next day. Then it went up to, again, yesterday, at some point, it was at a record high. I think it was over $350. Do I have that open still? Yeah. So at the moment, the stock is at 328.4. And at some point on the 28th of January, it was on over $468 per stock, per share. So they've been holding out for about 4 days at the moment, and they've been holding out quite well.
Yeah, they could be. It all depends on how strong the feelings are for or against Robinhood. A lot of these people are still using Robinhood. That they're the most popular. I think their CEO just gave an interview at the time of this recording, and he just or the day before this recording, and he said that Robinhood was the most popular app in the App Store among all apps for the last few days.
It's one of the most popular, yeah.
It was number one even before the whole scandal with them happened. But that's crazy. Like a stock trading app to be the number one app. Like I would have never expected that would ever happen.
Honestly, I think it goes back to our empowerment, because especially I think it's also a matter of culture to some degree, because in Europe, such a thing like investment is not really seen as that, as a given, and it's only reserved for a very small part of the population. Whereas here, investment is much more ubiquitous and adopted by so many more people. And before I came here, I would have never even considered investing. Like that was for the rich, right? Whereas now, I'm much more likely to do it. Maybe not put that much money in and do some limited stuff, but definitely it is an interesting avenue to pursue. And I'm thinking obviously of long positions and not short positions.
Well, so it's interesting. Well, it's not that obvious, but it's interesting how that might change now after this became such a big deal globally. This whole GameStop stock. I was just on a stream about the topic. It's one of those popular YouTubers that has been talking about investing and things like that, and he has this whole stream about with a ton of people on it, talking about GameStop and kind of like extending that movement to live streaming or having a live stream about the movement. And he was kind of doing a live analysis of his audience, and he was actually fascinated how he's got people from all over the world. He had a ton of countries representation. He expected it to be just the US, but it was like growing and growing, and he had people from all over the place. So maybe that might be one of those moments where it kind of like expands the number of people all over the world that are doing this.
Yeah. Podcasts like ours, when we obviously don't have the biggest reach at the moment, but even with podcasts and news outlets and different YouTubers and content creators in general talking about it, a lot of people might go and think, well, why not me? Why shouldn't I invest? It could remove some of the stigma. And I have a friend who used to be a Wall Street investor, and he used to work in the field. We're considering actually having some kind of either podcast or having him on as a guest or something, which we're still thinking about what the best option is to think about this and other occurrences and what stock trading is like from his perspective as more of an expert. But beside that, it could have to do a lot with common people are doing that now, and there's a change in the community in general, in the trader community in general, stock trader community in general, where before they used to have this opinion of you go big or you go home a lot more. And they say, oh well, if you unless you buy 100 shares or something, you're really not doing anything and you're not going to have any effect. Whereas now it's much more user friendly and commoner friendly or peasant friendly, if you wish, where you don't need to invest that much money even initially. You can buy a few shares here and there and just play around, because there is no what Robinhood and apps like that have done, and investment firms like Fidelity have done, is they've really reduced the amount of money you need per transaction. So transactions now are a lot easier. You don't need as much capital to do that. So that could really change the field as well.
Yeah, it definitely reminds me of my gym. I used to go in high school in the gym, and some big guys will be like, "Oh, go home and do push-ups. I'm gonna use this instead of you. Your
Yeah.
weight's too little." It's kind of like the same mentality of David and Goliath type of thing, like ganging up on the little guy.
Yeah.
For sure, yeah. Fractional shares and commission-free trading are two of the things that are definitely helped it. Fractional shares is where you can just buy a piece of a share. So even if the share might be like $3,000, you can have just $1 and still invest in the company. So, well, $1 probably doesn't make sense, but maybe you have $1,000 instead of 3,000, and so you can just buy a fraction of it. So that's kind of enabled, lowered the bar, and commission-free trades where you don't pay per transaction. You don't pay anything. You just if you make the mistake, then you pay the price. But
Yeah.
it's just your money. And I think one thing that's also very important is certain apps, like Robinhood being the most famous example, have great user interfaces. They're just much easier to use. They've reduced the friction tremendously. When I started, I was using Vanguard and Fidelity. These are more like your traditional big money managers to do this, and their interfaces are terrible. As a as a product designer, it just blows my mind how bad those apps were. I think fintech apps are the worst, or were the worst. And now you have things like Robinhood, and the app's awesome to use. It's super intuitive, super easy to use. I mean, even the descriptions in the app are one of the best descriptions I've heard, like that I've seen. I think that's definitely played a big role as well. A great UX.
Yeah, I think a big part of this could be the difference in culture, where in one case, you want to have your investing is reserved for the few which understand it. And it's almost like, it, for a lack of a better word, elitist, where only the few that understand it should be able to use it, or are using it. So therefore, design and user friendliness is not a huge problem. And in the other case, you're aiming to make a product for people who are not well versed in the field, and therefore your design needs to be a lot more user friendly.
Yeah, to some extent, even it's like the person using the app is not the person with the money.
Yeah.
It's more like a manager that manages the money for someone else, and so then you don't really care about the UI, because there's a big incentive for you to use the app. You want to manage someone's money or something like that. So it's much bigger transactions, much bigger deals. So that you have someone that actually deals with that in the office. You don't actually have to care. But when you go down to the consumer technology type of stuff, where you're directly being used by the investor themselves, then user interfaces generally make a big difference.
To change up the topics a little bit, the last thing I wanted to talk about is another aspect of social media, which was the banning of the subreddit from Discord. And early news were a little bit mixed, and I think a lot of people felt very strongly about it. And there was some early which reporting, which now seems to be false, which is that Reddit banned or privated, what's called quarantined, the subreddit, which doesn't seem to be true. And what instead happened is that the subreddit went private on its own for a while. And I think it was like an hour or several hours. That's from what I've read. And afterwards came back. And the point was, because of all the news attention there, they received a ton of new people, a ton of new messages, and they couldn't keep up with those new messages. So that's one aspect of it. The second one is that Discord actually banned their server. That is the case. And I think they either have revised that now, or are going to revise in the next day or so. And there seems to be a little bit of a disagreement of what's happened. But according to Discord, they banned the subreddit for toxic behavior. Let me just see if
I
I can
felt
find the
natural.
exact quote. Yeah, okay. So the exact quote is from Discord about banning the Wall Street Bets server. The Wall Street Bet server has been in our tests and trust and safety team's radar for some time due to occasional content that violates our community guidelines, including hate speech, glorifying violence, and spreading misinformation. And then they continue with, they've issued them multiple warnings in the last few months, etc. And so that's why they say they banned them. Now that seems a little bit odd considering they banned them the day after the whole thing kicks off. So the timing is really strange. And largely from what I see, people don't seem to buy it. And that's from comments on social media and other things. I mean, realistically, the way that the Redditors themselves, the mods on the subreddit put it on Reddit, is that if you get 250,000 people together in one place, you always have a few which make you look bad. And they're going to say something that is not great.
Right.
So that would be the arguments for and against. And this goes into our conversation from the last podcast, which is about social media censorship and how it can affect such communities and how it can be misused possibly. And we're not trying to allege that anything that Discord did or anything that the subreddit did, we're not saying they did anything, but the timing looks very strange.
Yeah, I mean, it feels just this sort of the outsider's view, subjective perspective. It feels pretty much obviously as a retaliation to what's happening. They're trying to stop essentially the craze that's going on. I'm not allegedly saying that they're doing it to help the hedge funds or whatever, but it is a lot of noise. It is a lot of drama and action, and it looked like certain institutions were just trying to put an end to it and control it for whatever reason they might have.
What annoys me is that this received a lot of negative attention from Discord, and I think they need and they deserve every last bit of it, because I staunchly disagree with Discord in this case. But if there had not been this attention, I wonder if they would actually have reversed their decision. And now they're supposedly working with the moderators to work something out. And I honestly doubt, and this is my personal opinion, I honestly doubt that they would have done that had there not been this kind of a spotlight on the whole thing. And my guess is that they thought this would not happen. Like, it wouldn't be that bad.
Yeah, but genie's out of the bottle now.
Yeah.
There will be consequences.
I hope so. Is there anything else we want to talk about?
I think we just about covered it. Where we stand on this as of today. Let's see how it develops. It's an interesting story. A lot to unravel there, I think, over the coming months. So, looking forward to it.
The beginning of the populist revolution. I'm joking.
Don't know about that.
All right. Thanks for listening, everyone, and we'll see you later.
Take care, everyone. Bye.
Thanks for tuning in, everyone. If you like what you heard, don't forget to rate us, like, and share. You can also follow us on Facebook and Instagram, where we are at Pine Talks. From the whole Pine Talks team, we hope you have an awesome day.